As if the current supply chain problems weren't enough, we now have another one to add on top, and that is with freight rail workers. They are anticipating a strike at the time you watch this, it might be tomorrow, so pay close attention. I'm going to bring you all the details. I will cover why rail is still important today. I'm going to show you what you can do as an individual because of the current economic climate and what is happening, all connected right here. Let's begin. A possible strike by freight rail workers demanding better working conditions could create shockwaves not only across shipping, but with commuter services as well. And I know some people might say, rail? What are we talking about? Is this 200 years ago? But of course, rail is still used quite a bit. I'll show you the data. It's surprising to many people. Here we have it. You can see right now that this is essentially going to affect a lot of individuals. Two of the largest rail worker unions, representing a combined 57,000 workers, continue to talk to their employers on issues such as work rules, sick leave, and other policies. So they're trying to get them a better deal, and the government is saying, hey, we're going to have to step in at this point. What are they going to do? Is it going to be a bailout? Who knows? So I'll cover more of those details in here, and I'll give you exactly not only what's happening, but why it's important, okay? Why are the unions threatening to strike? Labor unions are pushing for improvements to contracts that have been frozen at 2019 levels, including wage increases and changes to the healthcare policies. We have seen, of course, throughout this period of time that inflation has gone up tremendously, and you've watched healthcare costs have risen, and of course workers are demanding more. All kinds of workers across the board are simply demanding more, and this is of course part of that. So they go into the further details, and I have this article and I have another which I really would like to cover. Essentially, they're just trying to show you that they had this cooling off period which ends as soon as Friday. They can extend that, but the extensions are 24 hours only. So we will see. What industries could be affected? Now, this is the big one, okay? Roughly, did you know this, by the way? Roughly 30% of US goods are still transported by rail. So a pause could cost the US economy upward of $2 billion a day. That includes the auto industry. 75% of new vehicles that are transported by train would be held at factories. Industries from agriculture to construction would feel the impact of a work stoppage. Corn, wheat, lumber were among the top agricultural products shipped by freight in the last 4 years. So this is a big thing, it's a big factor. And I brought this up maybe around 3 days ago, that even fertilizer, if it's not able to move to where it was before, well, now these farms are going to have to start making alternate contracts. What can we do? How do we get this stuff? And of course, it always has an impact. Now, hopefully there's come to a resolution and this doesn't happen. That's the hope. But we have to, of course, prepare for the worst. And I think for a lot of these businesses here, they're not aware of what could happen. They thought, you know what? As long as we're not doing business with China, we're going to be fine. But problems could happen internally as well. As you see here, something as simple as a strike could, unravel the whole thing. And that, I believe they said that 1992 was the last time this happened. But essentially, this could occur, and this is why we must always have a backup plan. Our just-in-time type of inventory system just does not make it really, it's not as successful as we had hoped. That's part of it. And then of course, there's just factors that, when you keep interest rates super low for so long, it creates all these distortions and all these issues. But that's a whole different topic. Let's go back into this. You could see right here that as they show right here, why Amtrak is part of this. Like, why would a passenger train be part of this? Well, they say here, some Amtrak lines, including cross-country and long-haul services, operate on tracks owned or maintained by freight railroads, meaning they won't be able to continue if there is a strike. So that's big. That's important. And of course, you got to understand the domino effect. It's not just the trains. It's not just the stuff that's moving on those trains. Think of all the connected businesses and individuals along with it. Here we have it. Freight rail strike threatens supply chains. And of course, the government wants to interject. Federally mandated cooling off period ends Friday, opening the possibility of a nationwide strike or lockout. So this is what I wanted to get into. And of course, this has economic impacts. So I'm going to show you what's happening with the economy right now. I'm going to move through it and just give you the details. Understand where we're at, and then put this on top of that and think for yourself where this will be, where this will end up. This, I believe, is yet another instance at which we're dealing with, sort of a mounting crisis. IEA sees biggest China oil demand drop in over 3 decades. Chinese oil demand set for the first decline since 1990. According to the IEA, consumption declines to 420,000 barrels per day. So you look at this, what's happening? You got the lockdowns. At the same time, if they're not building the real estate they once were, well, everything starts to decline. They don't need as much cement. They don't need as much copper. They don't need as much all of these different things. If they're having lockdowns, people are driving less. Then you put this on top of it. Shanghai lowers typhoon alert level as Moifa weakens. So they have this typhoon coming towards, and guess where? Shanghai, actually they have a diagram right here, right at Shanghai and Ningbo. And these are, it's probably too small to see on this, but if we look at it, it is just showing us that things are headed right for the main ports. So they shut down the ports in preparation of this typhoon. And just like any hurricane you would have in the United States, this disrupts what's happening with the businesses, not able to get that freight out. This is going to just delay things further. Prologue to the Third World War. So on top of all of that, we add Medvedev, I can never pronounce it right, responded to security guarantees for Ukraine. Okay, imagine that. So he's saying, hey, the West, you want to help out Ukraine? You want to do things? You want to give them all the weapons? You want to give them billions of dollars in funding? Well, we have a message. The Kiev Camarilla gave birth to a project of security guarantees, which are a prologue to the Third World War. Second paragraph says, if the pumping of the Kiev regime with the most dangerous types of weapons continues, the military campaign will move to another level sooner or later. So essentially, they're saying, we're going to escalate things. We're going to take it up to the next notch. So this right now gives us a little bit of pause to realize how many levels deep this situation goes. The economy cannot be sustained by quantitative easing, okay? And that's diminishing as we speak. So what's going to happen? Well, this is a concern, okay? Look at this. US inflation is showing signs of entering a more stubborn, I love that, stubborn phase that will likely require drastic action by the Federal Reserve, a shift that has panicked financial markets and heightens the risk of a recession. Essentially what they're saying throughout this is that, well, maybe it wasn't so transitory, and maybe we were kind of wrong, but this time we're right. And we're going to make sure that there's a soft landing. That's right. Continue to stay calm, everyone. Well, I got more for you. They basically just say they have to keep inflation under control. They have to do this and that. We know the situation in which the CPI went up, and that was a concern. However, the producer prices had gone down. So this is giving them a little bit of ease at this time. Bank of America's Cabana says Fed likely to overdo it and cause a recession, just like some others have said the same thing. And I believe this guy who used to work at the Fed, but don't quote me on that. He sees strong labor market making central bank more hawkish. Fed's drive to tighten brings a headwind for risk assets. Absolutely. But when you think about it, have stocks really gone down all that much? The vast majority of investors who even have suggested to everybody that the markets will go down. I have never seen analysts say anything lower than 3,000 on the S&P 500. The maximum it was at the ridiculous heights, was around 5,000, just under 5,000. So if we were to come down even to 3,000, is it really that significant? For people who use leverage, it is. For people who took on way too much debt, it is. But is that really that significant? No. So people shouldn't really be that worried if they're in that situation. I mean, that's just the way it is. So I think it's going to take a lot of a stronger response from the Federal Reserve to really bring down stocks, because the average investor and everybody else believes very strongly that at some point in the future, there's going to be a lot more money printing. And as a result, stocks will go up, asset prices will go up as the dollars and the other currencies decline. So we'll see what happens. Here we have it. Europe's natural gas shortage could trigger a food crisis. This is the kind of thing that concerns me, and it's along with what we were talking about earlier in this video. You see what's happening, you look at the supply chains, you look at the constant one after the other, right? Every day it seems like there's something new. Energy crisis impact nearly every aspect of our lives, and this is particularly true of the food markets, with food production next year expected to be severely threatened. About 70% of the cost of fertilizer production is solely the price of natural gas. And as the price of energy soars, the cost of making it and moving the food is increasing alongside of it. So that right there shows you how significant this is. When you see the price of natural gas, understand that that has an impact on food prices. That's the link I wanted to give you. I hope others out there that make videos and all these things that are giving that information, because that's key. Because when you see natural gas, you say, okay, well, I don't use that much natural gas, or whatever the case may be. We got to understand how things link together. We got to connect the dots. That's what I try to do really often on this program. If you are new to the channel, you got to subscribe. Okay, because this is the type of thing where we're just empowering people. I learn from you, you learn from me, and we go. Here it is. Looking at this, mortgage demand from homebuyers falls 29% since last year as interest rates surge past 6%. So this is what we deal with right now when borrowing costs rise. Nobody should be surprised about it, but that is, of course, a deflationary force, and that is quite strong, to say the least. You will see this right here, that in time, where we have an issue is that when we move into a recession, people are unprepared, right? In this case here, I just wanted to say that you must have a product or a service to sell. In these times, you need something. You need a fallback at the very least. You might, it might be your service. If you're an electrician, Sean, Chaz, where are you, my friends? You're an electrician. Well, what do? Well, of course, you can use that service. Now, are there specialized ways that you can increase your income because you have a particular skill within your field that suddenly brings you into exclusivity? That's one way, especially if it's in demand coming in the future. Something that, I don't know, let's just say robots and automation. That would be something that's coming in that is new to some degree. So that's just one thing. Do you have a product or a service to sell? If you are, as I said here, if you're expendable, going into a recession is very hard. It's very difficult because you're a cashier at the supermarket. You see what's happening. Do you have a product or service? And for a lot of people, they would say no. So that's a big concern. High income skills are important and desirable. This is key. High income skills. I've brought this up in previous videos. If a market shrinks during a recession, you must take more of the pie to even out. So if you sell a product, let's say you sell a product on Amazon, okay, and you're making, let's say, $10,000 a month, well then, if the total pie is $1 million a month and you're taking 10,000 of that, well, now you have to expand the total. You understand what I'm saying? The whole pie is shrinking. Everybody's losing 10%. Everybody's losing 20%. But now you've got to expand. And there are ways to do that. Not the purpose of this video, but I just wanted to highlight these things. Because you as the individual, you need to do your best. You need to make things happen for yourself, for your family. And I hope that you will. These are just some topics, things that maybe are a little bit different than what you might hear, and that's why I want to bring them to you. I don't want to repeat myself in every video, but I just want to give some helpful tips to make sure that everybody, those that want to push, those that want to try, they certainly do their best, and that's all we can. That's all we can do, our best. So if you appreciated this message, I appreciate if you hit that subscribe button, and I'll see you on the next one. Take care.